Welcome to the London Outlook for Tuesday, the 12th of December 2023. Starting off with the economic calendar, there's quite a bit of red folder news. The first one being the Clement count change for the British pound. That relates to the number of people claiming unemployment, and it's quite significant. So we'll assess what the news release is and then fade it accordingly. Similarly, for the USD in the New York session, there's CPI news, which is extremely high impact, and I'd look to close any open positions from London at least an hour or two before this news release. But we'll touch on it in the New York session. Other than that, just I think thread carefully and be safe, because these news releases tend to have quite an impact on the markets. I'll jump straight into the GBPUSD 4 hours chart. Nothing much has changed since yesterday, so we're still in a confirmed bullish market structure, and we've tapped the pro-trend extreme right here, and we've also tested the last point of supply for this pullback phase. This 4HOB, like I mentioned, is the last point that could potentially play out and break the 4H swing structure, but we'll have to evaluate. It also gets quite intricate in terms of managing the directions to trade, because in this situation there's both reasons to long and short. Obviously there's more reason to long than short given what we've tapped into. However, this is the last point of supply and it could hold. Jumping into the 15 minute, I think what's important here is to understand the legs you are operating within. So you've got this pro-trend primary leg that was validated on the 15 minute and the 5 minute with order flow shifts, or in the case of the 15 minute, just a 15 minute change of character which was broken right here, and this is the primary leg for the pro-trend phase. In terms of shorting, we've got the secondary leg, and I say it's a secondary leg because the pullback phase itself is a primary leg. From this primary leg, we've validated this 4H pullback phase OB right here. This gives us an area to look to validate order flow shifts on the 15 and 5 minute, which you can see is on the 15 minute we've had the change of character. On the 5 minute we would have had likely a full order flow shift. Thus we've created the secondary leg. The thing to remember with secondary legs is if the secondary leg order flow shifts against the secondary leg, then any of these OBs within the secondary leg are considered CPBs and can't be used to validate a third leg, like a tertiary leg. So in that case we have to wait for a new secondary leg to form, which would mean that we wick this high, and then obviously we get a new jock in order flow validation on the 15 and 5 minute, or alternatively we extend the secondary leg with a body break of this low. Which essentially brings me to my summary of how do we determine which direction to trade. Like I said, in terms of actually trading, there's reasons to trade both directions. And from what I can see right now, there's probably more evidence to suggest longs rather than shorts, purely for the fact that it looks like we're shifting, right? Even though on the 15 minute we don't have evidence that demand is in control, what we can do is we can identify that because this is the primary leg, there's potentially support for for demand to hold on the 5 minute, backed by a primary leg supported OB, which means if we go into the 5 minute, what you'll see is we do actually in fact have supply taking control, which validates this secondary leg. However, we've then came into this primary leg OB right here. It's this unmitigated level on the 5 minute. We then had a change of character right here, and although we haven't clearly seen demand hold with this OB, we can keep in mind the fact that this is a window of imbalance, which thus potentially supports using the range as an OP. You can see price essentially reacted or swept this liquidity and then went and broke this structure, which likely means that demand is already in control. While I wouldn't be necessarily confident in trading price like this, I'd um, I'd rather wait, but I think there's more signs that demand is in control rather than supply. So for that reason, going into the London session, I'd be looking for evidence of a demand chain, just because I'm not completely satisfied with this. So perhaps if price comes down into here and then has a break of structure and we continue higher, then that's a good possibility, and then we can target something up here. However, remember, we've got to align with this news release coming out at 9 a.m. So an hour after the Frankfurt Open, or actually, sorry, at the Frankfurt Open, this will be released, and then we can align our trading with this news release and trade the London session based on that, at least until the London lull or close to New York Open, and then close any of those trades before the inflation release for the USD at 3:30 p.m. my time. I think that essentially covers it. Perhaps just to quickly hop onto the 15-minute. I mean, coming down to this level, supply was in control. And whilst we do have the change of character here, like I mentioned, we don't have demand in control. So there is a possibility that supply is in control. However, we can't just trade based on that, because of the fact that we're reacting to the pro-trend extreme and the pullback phase has achieved its objective, which means we need changes of character to essentially validate the IRL. But at the same time, we have to be cognizant of the fact that this demand may actually hold. So while we do have the change of character validating the IRL, and we can actually short from something within this area, we can't actually we can't trade above here. Which essentially means that if we take our fib, perhaps anchoring it like this, this would point more so to longs than shorts, just because yesterday's high, yesterday made a higher high and the low is below. So like I said, I'm more inclined to longs, even though there is the potential for shorts. It's just quite unclear. Perhaps just to clarify, what we can see is, although we have the change of character, we don't have demand in control, which essentially means anything within here on the 15-minute is valid to short from. So if we're confident with shorts, we could play that idea, because we have validated the IRL. However, in terms of actually anchoring the fib, it would have to go something like this. So using the high of the day and yesterday's low of the day, or today's extreme, would probably be a good way to anchor it, and then you'd cover yesterday's high of the day. So perhaps something like this, I would say. And I'm using this level because it's signs of liquidity in the leg. If you look at this is a chain, so this could be liquidity in the leg, and because it's a chain, this could also be. So that's why I'm saying it's best to cover this high of the day, the previous high of the day, and then we can target the last point of IRL. Technically we could target the extreme, However, that is very close to the full ADR range, and I think it's far safer to target something like this. 3.5 hours is quite reasonable. So that's the potential for a new high of the day for today. But in all honesty, I'm not completely confident in the shorts. I'd more so like to see the longs playing out, especially with this leg forming. So yeah, it's a bit of a complex day. I think the key is just understanding which leg you're operating within, who's in control, who's more likely in control, and then trade based on that. Like I said, the 15-minute essentially hasn't validated who is actually in control, and if we consider the fact that supply was lost in control and we have evidence of changes of character to the downside to validate the IRL, we can potentially go on the assumption that supply is in fact in control. And if that is the case, then we need to position ourselves in an area which would suggest that if we come into that entry point, it wouldn't validate that demand is in control. So in this instance, price coming into this entry point wouldn't necessarily be a break of this structure, because a break of this structure would validate that demand is in fact in control. So that's one option. And then the other option would be to base your idea on a 5-minute secondary leg, a pro trend secondary leg, which would be this right here. Perhaps I should mark it out. So secondary leg, pro trend. And if you're comfortable that demand is already in control, or you'd rather wait for evidence that for demand to hold and then trade based on a fib aligned to today's low of the day or yesterday's low of the day, depending on what feels more comfortable, you could certainly consider that. Bearing in mind, if we are taking longs, it's more so based on an existing low of the day rather than shorts, which is based on the idea of where a new London high of the day should form. So if that is the case, consider previous session liquidity, which would require one side of the Asia range to be liquidated. This is probably how I'd anchor my fib, either something like that or using yesterday's low of the day, depending on whether I need to factor in the previous session liquidity. However, in this specific case, it's more likely than not that I'd wait for the Asia range high to be taken first, and if that is the case, then your shorts would be triggered. And that's fine. I think in this situation, it's definitely worth trading both directions. Yeah, so sorry, a bit of a long-winded outlook, just due to the complexity and the nature of today's news releases and whatnot. But I think overall, I'd say, yeah, just trade carefully. If you're not comfortable, I think rather stay out of the market. But overall, have a good day, and we'll chat for the New York outlook.